Hello and welcome to Outlook Money's Investment Made Easy podcast series. This episode is led by ICICI Prudential Asset Management Limited under the Investment Awareness Initiative of ICICI Prudential Mutual Fund. I'm Varsha Jain from Outlook Money and your host for this session. Welcome to another episode in our series where we delve into the complex financial world and its intricacies and bring insight that may enhance your financial understanding and contribute to your overall financial well-being. This episode is brought to you in association with ICICI Prudential Asset Management Company Limited, and today our discussion will be around investing in gold and silver ETFs. Gold and silver prices have risen significantly this year with around 15% and 11% increase respectively. The primary reasons behind this rapid rise can be attributed to geopolitical tensions in the Middle East and expectations of interest rate cuts by the US Federal Reserve. Additionally, central banks buying gold as a hedge against their debt has also contributed to the surge in the price. Amid these factors, these metals are gaining popularity as safe assets. But are they viable investment at this time? Today, we'll discuss gold and silver ETFs, who should invest in them, their significance in a portfolio, and what investors should expect. Joining us for this discussion today, we have with us Mr. Chintan Haria, Principal Investment Strategy at ICICI Prudential AMC. Let's commence the session now. Welcome, Mr. Haria, to this episode.
Hi, Varsha. Hello to all the viewers, and as always, thank you, Outlook, for allowing us to reach out to all the viewers on a topic which is very interesting right now. And I'm sure the commodities are also getting people's attention. So thank you.
Yes, definitely. It's getting interesting. So to begin with, Mr. Haria, could you please explain how gold and silver ETFs operate, their underlying securities, and the ease of operation for retail investors?
Yes, so the basic question, see, in India, gold ETFs have been in place for the last 15 years. A silver ETF was launched as a new medium for investing in silver around January 2022 when the regulations came in. And the way they operate is pretty simple. Uh, when you invest in an ETF of gold or silver, the asset management company which is managing that gold or silver ETF has physical gold or physical silver stored in vaults. And these vaults are obviously audited and certified and as per the procedure laid down by the regulators. And this storage of gold and silver means that the investor does not have to worry about the purity or the security and the insurance, etc., of the gold and silver. At the same time, when they are investing in the gold or silver ETF through the exchange mechanism on the markets, they get access to this physical gold through the ETF. And this is what makes the gold and silver ETF comfortable for those investors who really cannot necessarily store the silver or gold. And also it allows gold and silver ETF investing with smaller denominations. So the way it works is pretty simple, that when you invest in an ETF, the asset management company at the back end is holding the physical gold or the gold derivatives, which helps the investor ultimately participate in the gold price rise or the silver price rise, and of course the fall as well. So whatever is the price of gold and silver in the international markets converted to the domestic markets, that is the price that the investor would get. And so the investor does not need to hold the physical gold and silver. The ETF and the asset management company hold it on behalf of the fund, and the investor gets the benefit of the ups and downs of the gold and silver price of the commodity.
All right. So gold is usually regarded as a safe haven because it has a low correlation with the equity market. So can silver be also considered a safe haven investment?
Let's discuss gold and silver as commodities. Historically, if we look at, say, 5,000, 3,000 years back, 2,000 years back, both silver and gold as commodities were used for as a medium of exchange and a store of value. There were gold coins, there were silver coins, and they were used for as currency. Now, over the last few years or decades, gold remains bullion or a safe haven, which is considered as precious metal. But let's say, silver is no longer necessarily a precious metal, but it's more an industrial metal with its varied applications. in various industries such as 5G, solar, and electric vehicles. So, silver, because of its brilliant electricity conducting capabilities, is now more an industrial commodity. Plus, silver is not stored by central banks as part of their reserve currency holdings, which is also why silver is no longer regarded as a precious metal in the way gold has been looked at. So today, gold is looked at as a safe haven investment, which is mainly used for jewelry and a store of value, while silver, apart from jewelry, which is obviously still being used, is more an industrial commodity which is used for various applications, and the applications are increasing, including even medical and electrical switches, etc. So the way we look at it is that gold is a store of value and a precious metal. Silver is an industrial commodity, and as things stand right now, gold is going up or gold is doing well because of the fact that there's been last 12, 13 years hardly any investment in gold. Plus, the world is looking uncertain because of the geopolitical tensions as well as the overvaluation to an extent in some of the world as far as equity markets are concerned, and lack of faith in the currency markets itself in some of the major currencies. While in the case of silver, the drivers are obviously increased demand in the consumer uh, in the industries in which it is consumed. So both gold and silver have a good future. Gold is something which is, we believe, uh, 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 between gold and silver, I think investors should have about 10 to 15% of their assets. But yeah, this is essentially the distinction how we look at gold and silver from a precious metal and industrial metal perspective.
All right. So as gold is mostly used as jewelry and silver is used mostly in for the industrial use, their price movements are affected by different factors, as you have mentioned. According to you, which metal prices are show greater price volatility, gold or silver? And also, which is more risky or potentially profitable?
Yes, so over the past 10 to 15 years history, if we look at it, and even maybe we can stretch it back to 30 years, silver is more volatile because
Mm-hmm.
it's thinly traded in that sense. Being an industrial metal, it basically moves up and down with the market cycles. While gold is more stable, it does not have too much volatility, it does not move too significantly in any direction. And generally, while gold and silver move in the same direction, the movements for silver are that much higher. So, if we look at it from that perspective, the risk and reward in silver is that much higher. So, if you time your entry right in silver, and if the prices of gold and silver go up, silver tends to go up more. At the same time, if you time it wrong, then silver can actually go down significantly more than gold as well. So, it's all about when you enter. But the fact is that silver is more volatile, and in turn, it has the potential to give you more returns as well compared to gold, which is much more stable. So, in a portfolio, let's say where you have 10 to 15% gold plus silver, you can
Mm-hmm.
look to have 70% of your allocation to gold and 30% of your allocation to silver as part of your gold plus silver allocation. Thank you.
Okay. So gold ETFs are more liquid than silver ETFs. Can we say that?
So, because gold ETFs have been in place in India for the last 15 years, they are more known. They have a wider audience, and of course, they have a wider AUM as well. But silver, being a 2.5 year product in the market,
Mm-hmm.
is pretty much gained its popularity, especially because silver is not easy to store physically. It kind of oxidizes or becomes black, and the purity of silver kind of reduces. So, it's silver, it's much better to put it in financial form through the ETF. And hence, we are seeing participation in silver ETF also improving. The liquidity, as far as liquidity is concerned, because there are market makers and authorized participants, which basically provide two-way liquidity in both gold and silver. Investors should not worry about the liquidity part of it. Both gold and silver are reasonably liquid as far as exchange volumes are concerned. Sometimes, depending on how volatile the commodity or how popular it is at that point of time, you may find fluctuating volumes. But as far as liquidity is concerned, the
Mm-hmm.
investor would be covered by the fact that the authorized participants are there to provide two-way quotes, and the liquidity is abundant on the exchanges in both silver and gold ETFs. Thank you.
Okay, so liquidity is not a concern. And if two metals are being looked at, then silver is more volatile than gold. Okay. Since jewelry is not typically viewed as an investment, what do you believe is the preferable medium for gold and silver investment? Like we are discussing ETFs, or it could be mutual fund, or in case of gold, it is sovereign gold bonds, or digital gold or digital silver. So, what is the best of the mediums for investment in these metals?
As far as let's look at gold and silver separately. As far as financial investments are concerned, as part of portfolio allocation and reallocation, where you need to probably get in and get out from that particular investment based on your overall asset allocation balance, then gold and silver ETFs are a good way to rebalance the portfolio because of their liquidity and the ease at which you can trade in and trade out. Apart from gold and silver ETFs, of course, there is physical gold, there is sovereign gold, etc., which is possible as far as gold is concerned. So, sovereign gold bonds have their own advantages, which investors should definitely explore. And if it fits their long-term investments, then sovereign gold bonds, which are issued by the RBI, they can be looked at as a long-term gold investment. But if you are looking at gold and silver as a means of asset allocation where you need to trade in and trade out, then gold and silver ETFs are the most liquid, easy way to participate in the gold markets. So I think you should probably figure out what is your end goal in terms of investing in those bullion or the metals like gold and silver, and then decide whether the ETFs work better for you or any other medium. But generally, given their liquidity, given their transparency of pricing, given the fact that they're at reasonably low costs without you having to worry about insurance security, gold and silver ETFs are something which should be a part of your portfolio when you're looking to diversify your financial investments.
Okay. And now another aspect of this regarding taxation, gold and silver ETFs do not offer now indexation benefits since last year, April 1, 2023. Given this, apart from diversifying the portfolio, as you said, 10 to 15%, are there any other advantages of investing in these metals?
While the indexation benefit has been removed with effect from investments made from 1st of April 2023, so those gold and silver investments and ETFs which were made before 1st of April 2023, they continue to enjoy the indexation benefit. But for
Mhm.
those which have been investing after that or for subsequent investments, while there is no indexation benefit, we still believe that the benefit that the investors get in terms of the ease at which you can invest and divest and reallocate your portfolio makes gold and silver ETFs attractive for the investors. And we do believe that while you don't have to worry about the purity and the security and the insurance, we do provide investors with an easy way of participating in metals, which otherwise they would not necessarily get. And the other way to participate in the metals would be probably through derivatives market, which also can potentially be a bit risky for the investors who do not know their risk-taking capabilities. So the gold and silver ETFs provide an easy way for investors to invest, and hence, despite the indexation benefit not being there anymore, they still are a more convenient way of asset allocation for investors looking at gold and silver. So look at it as an asset allocation play where you have fixed income, equities, REITs, InvITs, and gold and silver, and decide between which percentage you want, and then invest in gold and silver. Even if there is no indexation benefit, at least the price rise which is there in gold and silver, if that happens, you are participating in that price rise, which itself is a good thing for your overall portfolio balance. Thank you.
Okay. And if an individual has no exposure in either of these, should they consider investing in one or both?
Okay, if you have zero exposure, then obviously the significant price rise in the last 3 to 4 months means that you have to sit down with your financial advisor, have a plan as far as how you want your overall portfolio balance to be in. Let's assume you have significantly high equity exposure. Equities have also done very well. So you may want to book profits in equities and then move to the safe haven investment like gold for now. And then if silver provides you an opportunity in a correction, you can add silver. Or so slowly but surely you can do a equivalent of buying every month a little quantity so that over the next 12 to 24 months, you build your base case position as far as your exposure to silver and gold ETFs is concerned. Because in the long run, we do believe that gold and silver have a good future. And given the geopolitical as well as financial stresses which may come in, plus the fact that inflation is likely to be higher for longer, we do believe gold and silver do provide an opportunity for you to add in your portfolio. If you have zero right now, of course, calibrate it over a period of time and invest. But I would strongly suggest please have a financial advisor to help you with the planning and then execute according to plan. It will help your long-term wealth creation a lot more, and it will help you grow your wealth as well in the long run. Thank you.
All right. And here's my last question. Whether it is the right time to go in, buy more, or if somebody already has investments, is it time to book profits?
Sure. So it's an interesting question because it ties up with the previous question as well. That if
Hmm.
someone is sitting on zero investments as far as gold and silver is concerned, then they may look to add over a period of time because you should have some exposure to gold and silver, but the financial advisor will chalk a plan out of it and probably help you add at the right space. And if you're already invested, good for you because the past rally in the last few months, specifically the quick rally in the last few weeks, would have helped you, despite the global tensions, to build some wealth through gold and silver ETF. We do believe that if it is less than 10% of your overall portfolio mix, you should continue to hold that because the next question, if I remove money from gold and silver right now, where
Hmm.
do I put that money is a very difficult question right now because equity markets are also not cheap. Debt markets, given inflation, may not be necessarily a wealth preservation tool right now. So, the next question being difficult, I would say that if you have less than 10% of your allocation in gold and silver, you should continue to hold it. And at the same time, if you have more than 10%, through the financial plan that the financial advisor has for you, you may want to book certain profits as it goes further up. But there you should obviously keep in place and stick to the discipline of a proper financial plan, without which your goals will not be achieved and you'll probably make decisions which would hurt your long-term prospects of wealth creation. And so do not do anything in a hurry. Sit down, chalk a plan, and in the long run, I think wealth creation would happen across all financial assets. And gold and silver in the next few years should add to the overall portfolio mix for the clients as well, is what we believe. Thank you so much.
Thank you so much for clarifying all these doubts and answering all the questions. ETFs are one of the most liquid mode for investment, and this is good for diversification. An easy way of investment, as Mr. Haria said, and he expects that they have a good future considering the inflation and other different factors. So if you want to invest in ETFs, do consider taking advice from advisors and align it with your goals. The discussion has been immensely insightful, and I'm sure listeners have gained insights and clarity on this. Thank you, Mr. Haria, for joining us today and sharing your insights with us. We appreciate your presence.
Thank you, Varsha. Thank you, our Outlook team as well. Thank you.
It's important to note that the contents of the discussion should not be construed as an editorial recommendation from Outlook Money. With this, our today's episode of Investment Made Easy podcast comes to an end. For further exploration of investment topics, stay tuned to Outlook Money's podcast series and don't forget to like, share, and subscribe to stay financially informed. If you have suggestions, feedback, and questions, please do send us mail at letters@outlookmoney.com and stay tuned for our next edition. Until then, stay informed and continue to follow Outlook Money, your go-to personal finance magazine.